Hey, new news for July 29th, 2018. Mark Zuckerberg dumped Facebook stock ahead of crash. So that he was actually caught. He was caught dumping his stock ahead of the crash. That is called insider trading. He is now guilty. They caught him. So let's read this and see actually what the details are. So, Facebook CEO Mark Zuckerberg has been accused of insider trading after he was caught dumping billions of dollars worth of shares ahead of last week's stock collapse. The stock collapse occurred after the company revealed their smallest ever growth figures, caused due to millions of users closing their accounts following the recent Cambridge Analytica scandal. Just ahead of the announcement, Zuckerberg and other key executives sold off billions of their own stock shortly after Facebook suffered the biggest stock collapse in history. Insider trading at Facebook. The accusations of insider trading has now prompted calls for a full investigation into Zuckerberg and other top Facebook officials by the SEC. Now here we have the figures for Zuckerberg cumulative sales, Facebook millions, and here Zuckerberg monthly sales of Facebook stock. And you can see all of a sudden in 2018, it is abnormally, unusually, ridiculously high. So that is a red flag right there. Today, Gartman understandably takes a victory lap and writes the following. Facebook closed at 4 p.m. at a new all-time closing higher of 217 a share, but when the news came out, it fell swiftly to 173 a share, a loss of just over 20%. This is fascinating in light of the massive insider selling of Facebook shares by none other than Mark Zuckerberg himself in recent weeks and noted here yesterday. As a reminder, Facebook's crash overnight has been so massive at one point the total value lost was over 150 billion, greater than the market capital of the Bitcoin, making it the biggest stock collapse in history. And so you can take a look at this chart a little bit bigger. Yep. Okay. So back to the article. Bloomberg has also picked up on this insider selling deluge and writes that 9 Facebook insiders combined to sell about 4.13 billion worth of stock since the Cambridge Analytica data mining scandal first surfaced on March 17th. Chief Executive Officer Mark Zuckerberg accounted for 85% of the total, according to data from InsiderInsights.com, which analyzes such transactions. The social media giant's stock fell as much as 24% in late trading Wednesday after second quarter sales and user growth disappointed investors. And selling shares. There you see an image right there, and Mark Zuckerberg 3.5 billion. Mark Zuckerberg sold 3.5 billion in stocks since March 17, 2018. The acceleration in selling is notable because as Gartman and we showed yesterday, that compares with 4.31 billion in all of 2017, and while the traditional excuse is that the sales were part of predetermined trading plans, the sharp acceleration in 2018 selling, and especially in recent months, should raise some eyebrows, perhaps those of the regulators, because as Gartman, who will have the last words, writes, the selling was of such massive size and such recent hurried nature that one had to take note of Zuckerberg's liquidation as a clear indication of future potential problems. Those problems were made clear last evening. The SEC may want to take a look. Then again, with everyone's pension invested in Facebook in some capacity, the last thing the SEC will dare to do is cause a market event by taking a close look at the one company in which, as of last quarter, seemingly everyone was invested.